Hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is Thursday, February 22nd. So today, as always, we'll be doing a review of the trading day. We'll be going over any meaningful news, taking a look at equities, commodities, and then we're going to do some technical analysis on the major indices, specifically looking at the S&P 500. We're going to examine our proprietary currency baskets, take a look at any major upcoming news events for the week, and then round things off by looking at some potential trade setups. Let's get into it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable currency trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Now, traders will trade firm capital and keep 70 to 80% of the profits. So if you're a technical trader with a technically based trading system, we want to meet you. So click the application link in the description below this video. Now let's break down today's market action. So the major news for the day is that equities just continue their incredible melt up. We had some earnings reports yesterday. Specifically, the major one in focus was Nvidia, which has been kind of the bellwether stock for this entire AI-driven melt up. Now, the earnings report was all right, but it wasn't the kind of blowout report that we'd seen from the company in the recent past. And the market has still latched onto it and just absolutely exploded today. On the other hand, however, FX volatility is quite muted. We don't have strong directional leadership in the currency markets at this time. So looking at equities, I mean, a 2% day in the S&P 500 is crazy. That's a very, very bullish day. Total world stock index up, crypto more or less flat, gold flat, and oil slightly up as well. And taking a look at the currency side of the spectrum, the Kiwi dollar is the biggest winner on the day. The yen is the biggest loser. And then we have the Aussie dollar somewhat flat, the loonie a little bit up, the pound a little bit up, the euro pretty much flat, the dollar kind of flat, and the Swissy down a little bit too. So some of those risk-off currencies make sense, but apart from the Kiwi, we haven't really seen anything take off, which is interesting. And then on the crypto side of the spectrum, Ethereum is the winner today. But you know, these moves are not all that impressive for crypto. So although everything's up at least as of recording, it's nothing to write home about, at least not right now. As far as the market outlook goes, we are definitely sticking with a +3 as we broke to new all-time highs. And taking a look at this chart of the S&P 500, there's not much more to add here. I mean, that pivot low that we made the other day is going to be very, very important in the future, at least right now, and that's the most important pivot low. And I said yesterday to a few traders that what happens on the open is going to be very important today. And given how fast we've run away, you know, we have to stick with a +3. It's not even worth considering changing the market outlook to anything else. That will change. And you know, the faster things shoot up, the faster they fall. So when, not if, but when this market finally turns, it is going to be devastating, but we're not there yet. So enjoy the ride while it lasts. As far as news events go, there is nothing more for tomorrow, but we had a slew of economic data coming out of the Eurozone, and the UK hasn't really done anything one way or the other for those currencies. We had unemployment claims come in a little bit below where they were. Flash manufacturing came in at slightly above expectations, and services came in below expectations. All that has resulted in fairly flat currency trading today. Okay, now moving on to some currency analysis. Okay, so on the velocity score side of things, it's no surprise that the Kiwi would be a +3 and that the yen would be a -2, but everything else is kind of just stuck, and depending, things are trading in a fairly tight range, and we're going to take a look at that right now. Suffice to say, there's a time when these velocity scores mean a lot, and there's a time when they don't. Right now, I would say the score in the Kiwi is meaningful and the score in the yen is meaningful. Everything else is a bit of a mixed bag. So we're going to head on over to TradingView right now so you can see exactly what I mean. So with the yen, you can see we're still in that downtrend. We broke below this key support as I was hoping we would if we want continued short positions. I'm now looking for a pullback, confirm that broken support level as resistance, and then we can look for short positions safely in the yen. With the dollar, it's interesting. We took out this key level that I've been looking at, but we spiked through it and then came right back up. So tomorrow's going to be really important. If we can't decisively close below that key level again tomorrow, then I'm going to say we should probably focus on looking for long dollar positions, but I don't say that with a great degree of confidence. And the reason I can't say that with a lot of confidence is because as we look at the other currency pairs, you'll see, for example, the Swiss is coming into potential support, which is this pivot low from December 14th of 2023. I guess you could try selling into that if you're very short term, but there isn't a lot of juice left to go. So I don't like necessarily being short the Swissy, and I don't like being long the Swissy either because there's no signs of life in the currency. And when we go over the euro, it's kind of the same thing. You just see these long wicks on either side of these candles here in the euro. There's just no directional leadership for as far as the euro is concerned. We go up a lot, we go down a lot, and yeah, we're grinding up, but it looks extremely corrective. I don't want to be long or short the euro either. And then we look at the pound, trading sideways in a range. Don't want to trade in the middle of a range. So, right now, the yen's interesting, provided we get a bit of a snapback rally in the yen, but the dollar, no, the Swissy, no, the euro, no, the pound, no, and the Canadian dollar, not really. I mean, yeah, we're finding support along the bottom side of this trend line, but this is a parallel channel, and I would expect that parallel channel to break to the downside. So if anything, I want to be short the loonie, but I need to see the currency below this trend line first before I can actively consider looking for shorts. I don't want to buy the loonie either because we're just trading right back into this overhead resistance level, which has hemmed prices since the beginning of February, actually end of January. So now we're moving on to the Australian dollar, and I said if we can break out of this gray range, yes, we can look for long positions, but every time the Aussies tried to break out to the upside, it's come back down to earth. So there hasn't been any sustained follow through in the Aussie either. And that leaves us with the Kiwi. Now this is a strongly trending market. You see, we broke out of the zone, we're going higher. Yes, we are trading into some structural resistance up here, so that has me a little bit nervous. But provided we can break out of this resistance and then base, then Kiwi yen maybe could be interesting. So I could see that scenario where the Kiwi pulls back or trades sideways in this range and the yen strengthens, and then we can look for that reversal in the yen, and then we can look for continued upside in the Kiwi. Like that's a trade that kind of makes sense to me based on the baskets, but it's not something I'm terribly excited about. So I hate being the bearer of bad news, folks, but I just don't see much in the currency markets on an intermediate term basis that's interesting at all. Now, if you're much shorter term or much longer term, then I think there could be some opportunity here for you. But if you're intermediate term on the time frames, this is a very, very tough market. There's nothing wrong with that. It just means you have to be aware of those market conditions, take a step back, and come back to the market to trade when the conditions suit your trading plan. Okay, so to wrap things up, just play relative strength and weakness, please. I've had a couple coaching calls today, and the main takeaway from each of them with the traders I've spoken to is that they need to be paying more attention to relative strength and weakness. I don't care if you have the best mix of proprietary indicators, I don't care if you have the best algorithm, or you think you've discovered a secret chart pattern that no one else has ever heard of before. None of that is going to work unless there's proper juice in the market. And the best way to determine whether that juice is there to be squeezed is looking at relative strength and weakness and then velocity. And of course, it goes without saying, we should always be focused on proper position sizing and following our plan. All right, traders, that's it for me. I'll see you guys next week. Bye for now.